E-mini gapping above yesterday's high. Head and shoulders bottom bull flag. Left shoulder head, right shoulder. Target would be a measured move up, but I'm not confident that it'll go up that far. You know, I've been saying it might put one more new high in above the all-time high, but I think it'll have a hard time getting much above that without first having a bigger pullback. Let me get rid of this, simply because of how overbought the monthly chart is. 11 months without a pullback, you know, extremely unusual, so unlikely to continue much longer. That means that at some point in the next 1, 2, or 3 months, the month is going to trade below the last month's low. And since the monthly bars are about 50 points tall, the minimum reversal would be 50 points. I think it'll probably be between 100 and 200 points. So probably not much left to the upside. Weekly chart, we have a breakout. Last week was a sell signal for a failed breakout, and this week is on the verge of going above last week's high after going below last week's low, so outside up. But if we do go outside up, then you got to think next week might be an inside bar, and then we might get an IOI sell setup. Daily chart, we pulled back to the moving average over 4 days, but we're still in a 10-day tight trading range, and yesterday is not a good looking buy signal bar. As I said, we may do this, go to one more new high, but I think it'll be brief. Here, one more new high, but brief. Here, one more new high, brief. So we may go above here, but I think there'll be sellers up there. Whenever there's a big gap up, it increases the chances of a trend day. And when the gap is big like this, if there's going to be a trend day, it's more likely going to be up than down. It does not have to be a strong trend day, but it increases the chances of a trend day. If this is going to be a bear trend day, you normally get a bear bar in the first 1, 2, or 3 bars. So if we do not get a bear bar in the first few bars, then it's probably not going to be a big reversal down. If we get bull bars in the first few bars, it increases the chances that we'll get a trend up. Gap up bear, we got a bear bar first bar, another bear bar third bar. Gap up bear, 3 consecutive bear bars. Gap up, sell up, big bear bar first bar. Here we got a couple bear bars, but it went sideways. The point I'm making is if you're going to get a bear trend, you normally need a big bear bar or 2 or 3 big bear bars early on. And even if you do get them, the market can still go sideways and still instead of very far down. If you start to get bull bars, you're probably going to get an early rally, or you'll get a pullback to near the moving average and then try to get a bottom, like a double bottom here. 8 bear bars, but still formed a double bottom at the moving average. Here a bull bar, bears tried to sell off, and we got a micro double bottom and then a series of bull bars. We had a couple of bear bars, but a high 2, high 1, high 2, and led to an early rally. Series of bull bars, bull trend day. Tried to sell off, but 2 legs down to the moving average and rallied. The 2 big bear bars result trading range instead of a big bull day. Big bull bars, big bull day. The bulls want early big bull bars. A bear doji, but then a pair of bull bars, bull trend day. Big bull bar, big trend day. Big bull bar, big trend day. So you see the point I'm making. The first few bars are important. The more bullish they are, the more likely we'll be sideways to up. The more bearish they are, the more likely today will be sideways to down. So far, good bar for the bulls. If it closes up here, 25% chance it's the low of the day. All 3 moving averages were flat yesterday. So, some magnetic pull. Every bar that we get up here replaces a bar down here. So it raises the average price a lot. And the result is the moving average moves up quickly. All right, so clearly always in long. The bears need bear bars, and if they don't get them, the odds are we'll either have a trading range day or a bull trend day. Right now, the odds already favor a bull trend day just by having a first bar with a bull body. "25% chance we've seen the low of the day, and therefore traders buying here with a stop below the low probably have a minimally acceptable trader's equation. They're risking 2 points to make 5 or 6 points, and 25% chance of success. Their actual risk might be smaller. On average, days like this, we have a gap up and a decent bull bar. The actual risk is small. Usually get consecutive bull bars where you go up pretty quickly. You can see the hesitation, right? Consecutive bull bars further increases the chances that today will be a bull trend day, especially if we get consecutive big bull bars. Let's say 2 is a bear bar. Will bears sell below? Some will, taking a chance that the second bar is the high of the day. Right now, the bulls have to be disappointed. We're 2 minutes into the bar, and we have a bear body. The bears need bear bars, big bear bars, and probably 2 or more big bear bars. And without it, the odds are this is not going to be a bear trend. You can see it's going up and down, up and down. Final, at the end of the bar, it may suddenly become either a big bull bar or a big bear bar, more likely a bull bar. We have a gap up. We have a very strong reversal up on Monday. We have a first bar as a bull trend. We have a magnet at the all-time high just above. It's really funny how sometimes it just waits until the final seconds to let you know what it's going to do. That lack of urgency, I think, is disappointing for the bulls, and it reduces the chances that today will be a big bull trend day. Now for the bears, selling below 2, okay. All right, so the bulls got the minimum that they needed. They got consecutive bull bars. Bar 1, okay size, not especially big, and bar 2, small. So bullish, but not very impressive. Probably buyers below 2, buyers below 1. The gap above yesterday's high is not particularly big. The gap above yesterday's close is big, but the gap above yesterday's high is not all that big, and that increases the chances that we'll dip down and test into the gap below the low of 1 and possibly even below yesterday's high. But right now, always in long, low probability short. Suppose we get 3 consecutive bear bars. Suppose we get this, 3 bear bars, 2 of them good size closing on their lows. Then we'll probably get at least a small second leg down. What do you do here? Well, if you had to be in the market, you have to be long, right? We're always in long. We have 2 bull bars. One of them is one of them is a reasonably good bull bar. 3 bars into the day, we have consecutive bull bars. Neither one is especially big. 2 is small, and then 3 is a bear bar. 3 is not a big bear bar. I said that if you're going to get a bear trend after a big gap up, usually you need early big bear bars. Do not have that, so probably not going to be a bear trend. If you're going to have a big bull trend, you want good early follow-through, and you prefer big bars, and we don't have that either. So right now the odds are against a bear trend day. However, the odds are against a big bull trend day as well. And this looks like we're hesitating, and therefore this might be a trading range open. We may go sideways. We have small bars, so gap up, bad follow through, and the reversal down so far is weak. So we may go sideways here for the first hour or so. Buyers below 2, probably buyers below 2, but the gap above yesterday's high is not big. We have 10 trading range days. Right now, 50-50 chance we're going to close the gap. You see the hesitation, how it just hovers around the middle of the bar. There's not a lot of strong follow through. Look at the daily chart. We've been sideways for 10 days or so, and we're trying to get a bull breakout, but not a good buy signal bar 2 days ago, not a good entry bar yesterday, and at this price last week we kept selling off. So not a great location for a big bull trend. How many big bear days have we had in the past 3 weeks? 0. So not really good context for a big bear trend, especially with the 2 bull bars on the open. What happens if 4 suddenly becomes a very big bear bar? Well, then it increases the chances that we've seen the high of the day. Remember, the high or low of the day usually comes early in the day. In general, 20% chance the first bar, 50% chance by the close of the 7th bar, we've seen either the high or low of the day. Yesterday, bar 5 was the high of the day. Can the bears get consecutive bear bars? Can bar 4 close below 1? Can bar 4 close on its low? Will bar 4 be a big bear bar? All of those things are signs of strong bears. If it becomes a very big bear bar, if it looks like 16 from yesterday or 75 from yesterday, then in fact we could get a bear trend day. If, on the other hand, it stays about the size that it is and closes at or above the 1 low, that increases the chances that we're going to have an early trading range. It is reasonable to be long, buying the 2 low, buying the 1 low. But because I thought today would not be a very strong bull trend day, I have not bought yet. Consecutive bear bars closing near their lows. So are we always in short? Well, I'd like to see one more bear bar. With that in mind, can you buy right here by the close of 4, betting against the 3rd consecutive bear bar? I would wait. You've got big up, big down, big confusion, usually sideways. It looks like we're going down to test yesterday's high. But just like on the daily chart, when we tested a breakout point, we reversed up, even though it fell below the breakout point. If we fall below yesterday's high, I suspect that there'll be buyers there. "15-minute chart, parabolic wedge, 1, pullback 2, pullback 3, pullback, and buy climax, the biggest rally late in the trend. Not a good sell signal bar. If we get 3 consecutive bear bars and the 3rd bar has at least a modest bear body, like a 3 or a 4 tick bear body closing on its low, then we're probably always in long. And at that point, I would say at least 50% chance we've seen the high of the day. Again, the bars were small, so the odds are against a big bear trend day, plus we have support. Yesterday's high, the moving average. This bar, I think, is important. Not only do the bears need a bear bar, they need to get a bar closing on or near its low. Remember those gap up bear days? You want to see bear bars. Three bear bars. We bounced a little bit, but we sold off. So this is an important bar. Will it be a bear bar? Will it close on its low? Will it be big? And bulls obviously desperately want to prevent that. They bought the 2 low, they bought the 1 low, they bought more 1 point below 1. They're buying above the high of yesterday. They're buying bar 5, trying to prevent it from being a third consecutive bear bar. If it closes here, we're probably always in short, probably sellers above, even if the next couple of bars bounce, even if we get this. Three consecutive bear bars, we bounced a little bit, but probably sellers above. Still a few seconds left to the bar. All right, so always in short, but the bars are not all that big, and that reduces the chances of a big bear trend day. Not a lot of urgency on the sell-off. Can you buy above 5, a pullback from the break above yesterday's high? No, the odds are there are sellers here and sellers above, and buyers probably around yesterday's high for a bounce. Always in short after 3 bear bars, even though they're not that big, and the third bar has a tail below. Remember I said that I thought we might have a trading range open because the bars were small. A lack of a sense of urgency, a lack of a sense that, my gosh, the price is wrong. We have to race up higher to get a better price, or we have to collapse down to a better price. Looks like we're probably going to dip below yesterday's high and close the gap. However, the bear bars are not all that big, so I think we'll probably bounce in the next bar or two. Always in short, sell the close, sellers above. Right now, 50% chance I think we've already seen the high of the day. The bulls are hoping this is just a breakout test, a pullback testing yesterday's high. Can you buy above 6? It's a high 2. We had, if you look at 1 as a high 1 buy, and then you look at 6 as a high 2, I think there'll be sellers above, even though this could be the low of the day, a breakout test. The bulls should not have allowed 3 consecutive bear bars. 4 consecutive bear bars, sellers above, but I still think we're going to get back above the 1 low. The bars are not all that big, and therefore, there's a lack of a sense of urgency. There's a lack of a sense that the price is horribly wrong and it needs to be corrected, and then we have to race to a better price. Can you buy for a test back above the one low. Yeah, I think it's not unreasonable, right? You're about a point below the one low. We're probably going to get back above the one low, but I think we're always in short, and I think there probably are sellers around the one low, around the two low. Where do the bears sell? You can sell the 6 high. You can sell 1 point above 6, which is around the 2 low, or you can wait for a stop entry sell. And for the bulls, not a good looking buy. I think most of the people buying here are limit order bulls. So they buy the 1 low or 2 low, and then they buy more 1 point lower, 2 point lower, and they're disappointed by 4 bear bars. They're hoping to get out either with a profit if it gets 1 tick up above the 1 low, which it probably will, or they're going to be interested in avoiding a loss, just getting out break even. What are the chances that this is the low of the day? I would say 25% chance. Confusing, right? You get 4 bear bars, but they're not big, and the gap is still open, but probably sellers above 6. The market is still deciding on direction. 4 bear bars, good, but it follows a big gap up and 2 bull bars. To me, that's big up, big down, big confusion. It increases the chances that we're going to go mostly sideways for the first hour or so. Bulls hoping for a wedge opening reversal, a sell-off to support yesterday's high moving average, and a wedge rally. Always in short. Gap up, tried to go up, tried to up, tried to go up. So wedge bottom, 4 consecutive bear bars here, and then a bear breakout. It still became the low of the day. 3 consecutive bear bars down to around the moving average, new low of the day, still became the low of the day. Not a big bull day. Here we got a rally for an hour or so, but that was it. 3 bull bars in trading range. So at this point, the odds are against a big bull day. We're in the buy zone. Yesterday's high, the moving average, near this double top, and the bulls are hoping that we get this. Okay, tried to go up, failed. Tried to go up, failed. Tried to go up a third time, and we have a decent bull bar, so that would be a stop entry buy if we get it. So bar 8, bears want the breakout and measured move down. Bulls want the breakout to fail. A lot of the bears who sold the 6 high scalped because they were concerned that we might get an opening reversal up from yesterday's high and the moving average. Can you sell the breakout betting on a measuring gap? I would not. This is a support zone, yesterday's high and the moving average. So I think this gap down will fail. Right now we have a gap, close of 8, low of 6, so I think we'll get back above the 6 low. I scalped. I'm back to flat. I still think the bulls will try to get a wedge opening reversal at the moving average. The odds are against a bull trend. So the day will probably either be a trading range day or a bear trend day. I suspect that it's probably going to be more of a trading range day because of the absence of big bear bars. This is near a 50% pullback. Here's the bottom of the rally. Here's the top. Here's 50% right around these highs. Part of the reason why this turned down exactly there is because it's a measured move up and therefore, if we sold off here, it would be a 50% pullback. 60-minute bar has not yet closed, but a wedge, 1, 2, 3, a breakout above a double top that's failing, so it's a type of a wedge, and it's a lower high. 240-minute chart, you got a bull trend, bear breakout, lower high. As I have been saying, I think the monthly chart is going to have a hard time going up much from where we are. And, I am holding puts and put spreads because I think that either we've seen the high, or if we go to a new high, we will not go much higher. Unlikely to have an outside down day. Yesterday's a reasonably good sized day, so it would require a lot of points to get there. And we're starting from far above yesterday's high, and that makes yesterday's low even further. And, I talked about that yesterday, that this sell-off was unlikely to form an outside down day because the prior day's low was so far below. And the same is true here, which means we'll probably bounce somewhere around where we are. $2,500, the market has been having a hard time getting above it. This is 2,500. We've been straddling it. Where is the big breakout above the big ground number? The important psychological resistance level. No big breakout, and that increases the chances that these repeated breakout attempts will fail, and that will test down to support. Bear breakout and follow through, but tail on the bottom of the bar 8 breakout bar and the follow through bar, even a bigger tail, plus at support and arguably a parabolic wedge. We went up, and the bulls are trying to get up a third time. So a good location for bears to take at least partial profits. By the close of bar 7, at least a 50% chance we've seen either the high or low of the day. And right now, it's much more likely we've seen the high of the day. Every bar that gets added increases the chances that we've seen the high or low. By bar 80, or if bar 80 is near the low of the day, probably 99.9% chance we've seen the high of the day, that we're not going to get up to the high in the one remaining bar. And, for me, around bar 18 is where I think the probability gets up to 90% that we've seen either the low or the high. So if you just look at a bunch of charts and look at bar 18 and then look to the right, you'll discover that 90% of the time, once bar 18 formed, either the high or low of the day was in for the rest of the day. Bulls want a parabolic wedge opening reversal at the moving average. Odds are we're going to stop going down. I don't know how far up we go, or if we go up at all, but the odds are against, the odds are we're going to stop going down here. In general, when you get a breakout, 8, 9, 50-50 chance it's going to lead to a measured move down, 50-50 chance it's going to fail, and the market will trade above the breakout point, the 6th low. In this particular context, it's probably more like 60% chance we're going above the 6th low. That's a weak sell-off down to support, 50% pullback, moving average, and the breakout point. So we may go a little bit lower, but probably not much lower before we start to go sideways, maybe up. Bulls want the wedge bottom. Bears want a second leg down from the breakout and follow through. I think the odds are against much more down here without going sideways. Not a very strong buy. We're getting near the end of the first hour. Bulls trying to put a tail on the bottom of the 60-minute bar to make it less bearish, and the bears want the bar to close on its low. Because of all the small bars and the parabolic wedge opening reversal up from the moving average, I think we're probably going to try to bounce here, but I don't know that the probability is high enough for a scalp buy, and I think the reversal will be minor, and therefore it's not a particularly good swing either. However, a lot of the bears are losing interest selling. The bars are not all that big. We have a tail, we have a bull bar, we're testing support, 50% pullback, moving average, parabolic wedge. So a lot of the bears will prefer to sell higher, like maybe around the sell climax high, the 8, 9 high, and the 7 lower high. So not a high probability short below 10 or 11. You can see the Globex market, big up, big down, near the bottom of that final bull leg. So a reasonable location for some kind of a bounce. If we do get a 50% pullback around the top of the sell climax, near the top of that lower high, the bears wanted 3 consecutive bear bars. The bulls were unable to stop them. The bulls want 3 consecutive bull bars. I don't know if the bears will stop them, but because of the possibility of a parabolic wedge opening reversal at support, I think there's a 50-50 chance we're going to bounce here. Plus, I think a lot of bears will not sell below 10 or 11. A bull bar, parabolic wedge at support. So the bears probably want to sell higher, and bulls probably will start to buy below, betting that will start to turn into a trading range. Final minutes of the hour, and the fight is over the appearance of that 60-minute bar. Will it close on its low and be more bearish, or will the bulls get a little bounce here and put a tail on the bottom of that bar, increasing the chances that we go sideways rather than down? Probably buyers below 11. I would not take that short. Now the bulls have potentially a micro level bottom in addition to the parabolic wedge, but not a high probability trade. Suppose they suddenly get a big bull bar on 12 or 13. Can this be the low of the day? It's possible, but I think not likely. I think it's too many bars down. I gave that one example where, well, here we sold off for about 7 or 8 bars and then rallied. Here, again, sold off for a lot of bars and then rallied. Here we sold off for 8 bars and then rallied, but the initial rally was much stronger than what we have today. This is 3 bars, 2 of them are big bull bars. And this is a double bottom and a higher low at the moving average. So 8 bars, but the initial rally was stronger. This is what the bulls are hoping for. But they need to start to get decent bull bars. Suppose we fall below 9. Right, then we have a gap here, and possibly a gap there. This could turn into a small pullback bear trend day, but the odds are against it. Getting drawn down to the 60-minute moving average. I said earlier I thought we would not go outside down, but we're falling with pretty decent momentum, and that increases the chances that we can go outside down. Can you sell here? I would not. It's a surprise bar, so we'll probably get a couple small legs sideways to down, but we're at the next support level, 60-minute moving average. We have a gap here, already at that measured move, and potential gap here. We're at the next support level on the Globex chart, and then here's the final one, so spike pullback channel. You can see they sold the close. They opened at 14 below the close of 13, so some urgency now. For the bears, this is a strong enough breakout, so they'll probably put their stop above here, but I am hesitant to short here. So right now I'm trapped out. Big bar, climax. Can you buy? Betting on a climax at support. I think it's probably not a great buy, but I think we're probably going to stabilize. I thought we were going to stabilize here and did not. And now we have a big bar. The market is reaching down to the next support level. Can we go outside down? Well, now it's not that much of a move to get outside down, but I still think the odds are against it. So yesterday's low is here. We are here. What's more likely, that we get here or there? I don't know that we get all the way up there, but I do think we'll probably get up to the 12 high. Still sell the close, but I'm flat. I don't want to sell down here after a sell climax. It's interesting right here. What do you do? Is it a big enough bear breakout for 2 legs down? Well, it is, but it's also fairly climactic, and we're at the 60-minute moving average. We probably will not fall below yesterday's low, so I would get out of shorts above 15. And bulls are hoping that it's like 25 yesterday, where we had the sell climax, and then we traded up for the rest of the day. I'm not sure that the math is worth getting long. Now, was it reasonable to buy above 10? Yeah, I think so. So wedge opening reversal at the moving average, and therefore some scale in bulls will buy above 15 if it has a bull body, looking for it to get back above the 10 high. Others will wait to see if we get a micro double bottom. But I would get out of shorts and wait at least 5 or 10 bars before looking to short again. Because if 15 has a bull body, there's a reasonable chance that we're going to get back up to the 10 high and the top of this sell climax. Reasonable, 50% chance or better. Right now, bar 15, probably an 80% chance we've seen either the high or low of the day, and obviously much more likely that we've seen the high of the day. Probably 80% chance that we've seen the high of the day. We've had a lot of reversal days over the past couple of months where we've had early sell-offs and then the market rallies for the rest of the day. Yesterday we had a reversal day, did not get up very far. We had a reversal day here. The bulls got a much bigger reversal. Reversal here, reversal here. Late reversal there. Reversal here. A little bit of a reversal there, reversal here. So the bears get out above 15, and aggressive bulls buy above 15, but they probably have to put a stop below 78 or yesterday's low. And other bulls will wait to see if we start to get a series of bull bars, or if we go sideways for a few bars and get a micro double bottom. Even though it's only one tick above 15, I think if I were short, I would get out, because even if we go down a little bit more, this is so climactic that we probably will not go down much more. You can draw it
Your
like
deal is
that.
confirmed.
I'm trading currencies and other accounts. That's what that noise was. But anyway, it's similar to yesterday where we had a bear break below a tight bear channel. This is a stronger bear channel, but the idea is the same. Here, the reversal up required a small double bottom, bigger double bottom. Did not get very far up, but it was the low of the day, and this is the same thing. So if it's not the low of the day, it's probably near the low of the next couple of hours. So it'll probably be sideways or up for a couple of hours. We may get one more push down, but I think the odds are against it falling below yesterday's low or below the 78 low. Who's going to sell below 16? Similar to bar 11. What's different is this is extreme, and it's probably a climactic end of the sell-off. While we might get a little bit more down, we're probably not going to get much more down without bouncing here. Target over the next couple of hours is up here. Low one short, but after a sell climax at the 60-minute moving average, it's similar to selling below 23. If we go down, we'll probably not go down very far. So you only take the short if you're able to make really quick decisions. I think it's better not to take the short. Instead, wait to see if we get a micro double bottom and then buy the reversal up, or wait to sell a rally. What about the limit order? What about the always in bears? Well, I think they get out about 15. Some will wait for a second entry, buy. The ones who get out theoretically have to sell again below a strong bear bar, 16, but I would not. The odds of it going down much from here are not high enough for me to take that short. What about simply buying at the market and putting a stop one tick below 16? That's actually interesting. The bulls will try to prevent the bears from getting a resumption down, and therefore buying right here, they're risking 2 ticks, and they may get a 2, 3, 4-point rally here. I talked about that the other day. Here's an example of it. Reversal up. Bulls will buy, preventing the sell from triggering. Trying to find, there's an example comparable to this. Anyway, if we do get lower, this is probably what will happen. We'll probably get some kind of a micro double bottom after the sell climax. Gap up, became outside down, and then we got a big reversal up. Again, I don't know that we're going to get a big reversal up, but we've had a lot of reversal days lately. Daily chart very close to outside down. Here's yesterday's low. Remember last week's low, I talked about this many times over the past few days, that last week is a sell signal bar. We traded below last week's low, reversed up strongly, and I said that whenever you trigger a sell on a higher time frame chart, we did right here. This was the drop below last week's low. A lot of times you get a reversal back above the breakout point, and then later come back below it again. We went below it here and here, reversed up again. We're going below it here as well. And I bring this up because I said that even if the weekly chart looks like a doji bar, or is a doji bar, for Tuesday, Wednesday, Thursday, it's still possible on Friday that we could get a huge bear day and totally reverse the rally of 2 weeks ago. So even though it does not look likely, you got to keep that in mind. It's a sell setup on the weekly chart. It triggered, and while we have a pretty good bounce, you have to be open to the possibility that we could get a reversal, big up and then big down this week. Not likely, but we could get a couple very big bear days over the remainder of the week. Consecutive sell climaxes at support near yesterday's low, yesterday's close, but the bulls need a second entry buy. Right now it looks like this. I do not know if we'll get that. Above yesterday's high, reversed down. Below yesterday's low, reversed up. We're getting near yesterday's low. Sometimes when you have a day trying to become an outside down day, you get a strong sell-off, and then buyers come in just above yesterday's low, and the day never goes outside down. And the bulls are trying to do that here. Traded above yesterday's high, reversed down strongly, could not get below yesterday's low, and then a very sharp reversal up. The bears gave up. They wanted outside down, couldn't get it, and then they gave up. So this is what we might get. Anyway, if 18 closes on its high with a decent bull bar, I think it's an okay buy. It's another parabolic wedge where the first leg of the wedge is a wedge, and then second leg and third leg. Suppose that is a 2 or 3 tick tail. Well, I would get out of shorts if it has a bull body of any kind, and if it closes on its high, it's a reasonable swing buy. unlikely to go straight up. This is unusual, right? But we'll probably try to get to the top of the sell climax high. Most recent sell climax high is here. If traders do buy above 18, the stop is below the 18 low. We may have to go sideways for a few bars. If the bulls are going to get some kind of reversal, we may have to go sideways for a few bars first. Higher probability, you wait to see a couple big bull bars. But if it closes near its high, it's a reasonable buy for a swing up. If it has a 2 or a 3 or a 4 tick tail, then I think it increases the uncertainty and it lowers the probability. Decent sell climax buy. Can you sell on a stop below 18, arguing it's a failed bottom? I would not. So I would get out of longs and then look to buy one more reversal up. Again, the bears, I think, get out above 18. And if they get a bear bar like 16, theoretically they have to sell again. But like I said, below 16, the odds are we're not going to go down much further before we try to stabilize, go sideways, possibly up. Now, do the bears sell below 19? I would not. I would be out of shorts, and I think it's okay to be long. Unlikely to go straight up. More likely some hesitation here. Can we get all the way back up to yesterday's high? At this point, it does not look likely. Can we get below yesterday's low? Maybe 50-50 chance we get there. We have a lot of momentum down, but I would not sell down here. I would wait for at least some kind of a second entry sell. We have a good bull bar 15, a better bull bar 18. That significantly reduces the chances that we're going to go much lower. At least over the next hour or two, it increases the chances that we'll go sideways to up. Now, always in bears get out. Now, theoretically, they have to sell again below a bear bar. 19 is not a bear bar. So, for me, that's not enough reason to sell. Probably buyers below 19, similar to over here. Similar to this sell climax over here. The bears tried to get resumption down, but did not get very far. And they were able to prevent it from falling below yesterday's low. Right now, 50-50 chance today will prevent it from falling below yesterday's low. And probably buyers below 19. We might be always in long. A lot of bulls would like to see one or two more strong bull bars. When I say always in long, right now I'm not expecting a big bull trend, but this is a sell climax test of yesterday's low. They bought yesterday in this general area several times. We have a decent bull bar, 15, so theoretically scale in bulls buy more here. And we have a couple magnets above the moving average and the 15 high and the sell climax high. Important bar, is there going to be a sense of urgency that the market went down too far and it has to go back up, that the correct price, the fair price, is higher? And, the market's deciding that right now. Has it gone down too far? Will it be unable to get below yesterday's low? If we get a low too short, let's say we get a bear IOI on 20 or 21, I think the bulls will get out on a low 2. And if it's a bear sell signal bar, the bears might sell again, although I would be hesitant. Important bar, right? The bears are trying to get below yesterday's low, and the bulls are trying to get the reversal. So this is an information bar. The bulls have a chance here to convince traders that we're going up for the next 5 or 10 bars. So they want this bar to be as big as possible and to close up on its high. Good bar for the bulls. Can the bulls lower their stop to below 20? Well, if we're going higher, that 20 low should hold, so I think it's okay to tighten the stop. Still only 5 ticks up, so bulls so far have been unable to scalp even 1 point. Bears trying to close the gap, trying to get below the 19 low. Remember, I said the bears are going to try to get a low too short. If we get one more bull bar, I think most traders will conclude we're always in long. So this is also an important bar. If we get a bear inside bar closing on its low, a lot of the bulls will get out below it because that would be a low too short in a bear trend. Really pretty interesting that we have a reasonable buy setup, and here we are 10 minutes after bar 18, and the bulls have not been able to make 1 point. So that makes it less bullish. The bulls want the market to race up, and so far we're not getting that, and therefore this is very unlikely today. Suppose it has a 1-tick bear body. Will the bears sell? I would not. If it has a 1-tick bear body, then probably buyers below. The market's deciding whether we're going to get a reversal or a trading range. And these bars are determining that. And right now it looks like we're probably going to get a trading range because we're not racing up. And trading range, top of the range, might be around the 15 high, the moving average, and 16 high. If you're not long, can you buy right here? Arguably, theoretically, sure, right? But a lot of the bulls are thinking trading range, and they're looking to scalp for a couple points. And if it's a trading range, then you're buying at the top of the range. You need to stop down here. So it's better to either wait to see if we break strongly to the upside or buy a pullback. The market's deciding on a trading range, and 50-50 chance it's going to be a trading range, which means 50-50 chance we'll get a deep pullback. So the math is not great for buying up here. You have a lot of bulls trying to take partial profits at 2 points, right? So you got a lot of bulls selling here. You have scale-in bulls who bought 1 tick above 15, and they're trying to sell out. They're hoping to get out break even. Some of them bought more above 18, so they're trying to get a scalp on their second entry and break even on their first. For the bears, selling below 22 for a low too short, I wouldn't do it, no matter what 22 looks like. I could see bulls getting out below a decent bear bar, but I would not short. We're getting too many bull bars closing on their highs, 15, 18, 20, 21. I did buy the 18 high, and I placed a limit order to get out on part of my trade at 2 points, and I just got filled, even though it's only 9 ticks up, and that increases the chances that will go higher. Let me turn the screen off for a second. I just want to check something. I'm checking. I don't know if this is useful or not. I'm starting to experiment with taking trades in the room, and I don't know if this is clear or not, but I bought, I have that trading room account, which I trade a single contract in. I bought with a stop above here and placed a limit order to get out 2 points up here, which I did. -1 means that I sold out of the long, but I don't like that. Let me see if I can, -1 is, let me turn off the screen again and play with this, because -1, conveys the impression that you either shorted or, I didn't short, I got flat. The setup in TradeStation is really complicated. You got like 20 or 30 different options. I'm just looking at the choices that I have in formatting this, and I don't like the choices. I don't like the -1 showing up when I exit. You know, I may have to call TradeStation and ask about that, because it seems stupid to exit and have it show a -1. I'm still playing with settings. You know, for example, here's one setting, but it shows L, and to me, I'm not long there. I just exited there. So that's not the setting that I want. And then this is another setting showing that I bought one tick above here and that I sold here, but you know, I did not sell to go. To me, this should be a +1 and this should be a 0, because I bought and then I sold to exit out. Instead, to have this as a 0 and that as a -1, and I don't want that -1. So I don't see how to get rid of that. Now, let me go back to this. Bulls still always in long, and the market's deciding, are we in our trading range, or are we going to get up to the top of this sell climax? Because we've had so many reversal days lately, you have to bet that today will be a reversal day as well, and that we'll probably get up to the top of this sell climax as well. Arguably, it was reasonable to buy the 10 high, and therefore bulls buy more above bull bars like here or here, and they'll get out around there. For the bears, a low too short, low 1, low 2, but I think we're always in long, and probably the best the bears get over the next hour is a bear leg in a trading range, and the bulls would then get a higher low like this, so rally and then higher low. Can you sell 23 high, betting on the trading range? Because it just went always in long, I would rather buy a pullback than sell a rally unless we start to get more bear bars here. You can see exactly 10 ticks above 18, and then we're pausing. And that tells you that a lot of the bulls took partial or full profits at 2 points. It has to go 10 ticks for them to make 8 ticks. Probably buyers below 23, but you only buy there if you're willing to use a stop below 18. You know, the market's deciding, is it a bull trend, you know, with maybe a 1 bar pullback, 2 bar pullback, and then we keep going up here? Or is it a trading range like this? I guess I think it's probably more likely that it's a trading range, and that we'll probably pull back before we go much higher. This is the final bar of the second hour, bar 24. The bears had a sell below first hour's low. That makes this the entry bar. And if you're a bear, or how are you feeling about your entry bar, right? You know, you're clearly disappointed. Right now, the bar is above its midpoint, so it's a reversal bar. It's possible that it could become a bull bar, but 2 minutes left, not likely. The first hour closed with bar 12, the second hour opened bar 13. For this to be a bull bar, 24 has to close above the open of bar 13, and we only have 1 minute left to go up 2 points, so not likely. That means it'll be a reversal bar, close above the midpoint, but a bear bar, so not a strong buy setup. 5 minute chart, we got above the 16 sell climax, then we have another sell climax at 12, and I think probably better than a 50-50 chance we'll get there at some point, but look where we are. We're near the top of yesterday's trading range, and the rally is not all that strong. Bull reversal, weak entry bar, a couple of bull bars, and then some dojis. So I think it's slightly more likely that this is a bull leg in a trading range and that will test down than it is that it's a buy climax and the start of a bull reversal day. I'm going to turn the screen off and play with those settings again on showing orders and fills. It's going to take me a few minutes to fix these settings. I'm just trying to make the ones on this computer the same as the ones on my other computer. My other computer just crashed, so it's going to take a couple of minutes to fix it. This is what I was talking about. Is this the start of a bull trend, or is it a bull leg in a trading range? And it's more likely going to be a bull leg in a trading range, which means it'll probably have a bear leg. So we'll probably test down to around the 20 low. Well, the bear is a double top bear flag. Possible break below the neckline and measured move down. Not likely, because that would take us far below yesterday's low. And usually when you get an outside day, the break below the bottom is about the same number of points as the break above the top, and that would take us much further below. So what I was saying is, when you have a day like this, that's how far we went above the high. If we go outside down, that would be a reasonable expectation for, well, here's yesterday's low over here. You'd expect it to go about that far below the low. On the other hand, if we get a measured move down from the double top bear flag, That takes us all the way back down to the August high. I'm showing this double top bear flag for a reason. It's because, as unlikely as it appears, there's still a 40% chance that it's going to trigger and that we're going to go down. And I know you can say, "Well, Al, how can you possibly say 40% chance? That doesn't sound credible." I'm saying 40% chance because that is the reality. That if you have a reasonably strong bear trend and you get a double top bear flag, 40% chance you're going to get a swing down, even though the reversal up was strong. Double top bear flag here. We got the measured move down. Pretty strong reversal, but still got the measured move down. Tried to form a larger double top bear flag and instead got a higher low major trend reversal. Bear trend, double top bear flag, measured move down. Bear trend, double top bear flag, more than a measured move down. Gap down, bear trend, double top bear flag, measured move down, and then another double top bear flag, almost a measured move down. Strong reversal up, almost a measured move down. Pretty good rally here, yet it became a double top bear flag and we got the measured move down. Bulls trying to get the higher low. Bulls hoping for a higher low major trend reversal. Probably not enough bars for a major reversal. Only 2 or 3 bars down. Usually with a major trend reversal, you need more bars. And if you get a reversal after 2 or 3 bars like this, it's usually minor and you just go sideways. And, we're at the 60-minute moving average, the 5-minute moving average. We're in the middle of yesterday's range. I think we're always in long, right? And therefore, if we get a 2-bar reversal here, 26, certainly an okay buy for a swing up. It's good for the bulls that the second high of the double top is slightly higher. That increases the chances that the double top will not be successful and that will continue higher. But, I think these 5 bars are confusing and we may go sideways here. 50-50 chance we're going to get back up to yesterday's high and the top of the sell climax. 40% chance we're going to have a swing down. Top of a trading range, I think a lot of bulls are hesitant to buy up here, especially after 25 being a bear bar. And for the bears, they made money selling the 23 high and the 22 high. They might sell the 25 high. I would not because of the higher low. But right now I'm not willing to do anything. Sorry about that. I think we're in a trading range. Top of the range might be here. We may go sideways here, or it might be up here. The bulls are trying to get back above yesterday's high. The bears tried to go outside down and failed. Bar 18, 90% chance we've seen either the high or low of the day. I think there's probably a 60% chance that we've seen both. So I think 60% chance 18 will remain the low of the day. And I think probably 90% chance 2 will remain the high of the day. Not a good buy signal bar with the tail on the top of 26, top of a trading range. So a lot of bulls will not buy up here. Higher low reversal, but only one or 2 bars down. So probably a minor reversal, which means Probably not going to go very far up. I want to turn the screen off again and try to make the settings on this computer the same as on the other. The other I think has a little bit better settings. It's going to take me a couple of minutes to go through the settings. There's so many settings for this. So I have to go through each of, probably 20 or 30 settings. Well, that's interesting. I thought I had it set up exactly like the other computer, but the other computer does not have that -1. So let me play with the settings again. I'm missing something. I'm still looking at the settings. Now, well, I'm not seeing how I got rid of that -1. On the other computer, I do not have the -1. And I don't have the 0. I just have the entry and the exit. Let me try again to go through things, see what I'm missing. Well, I cannot get rid of that -1. I might call TradeStation to see if they can help me with that. Bull's trying to get a triangle buy above 29, still always in long. If it closes on its high, not too big, I think it's an okay buy. Slightly better than 50-50 chance we'll get a leg up. And for the bears, they obviously don't want that to happen. Since I think we've seen the low of the day, stop for the bulls. Well, if it's a decent bull bar, 29, and bulls buy above its high, they'll probably put a stop either below 28 or 26, although the better stop is below 18. If it's not a really good bull bar,
we apologize for the delay.
I'm on hold for TradeStation. Anyway, if it's not a good bull bar, I would wait to buy. The only reason to buy is because you're betting we're not going to fall far. Right, you're betting that we're going to go up here, that we got a reversal, and it's a strong enough reversal, and a triangle, 3 pushes down, 1 pullback, 2 pullbacks, 3, or you can call it a high 2. You're betting that it's a good enough bull flag to get us up here. But I would only buy it if it's, closing on its high, maybe a 1-tick tail. And to sell, I would not sell. Even if it triggers going above 29 and reverses down, the odds are we'll get a higher low. they're going to let us know on the final tick if it's going to close on its high or have a 1 or 2 tail on top. If it closes on its high, traders will consider buying it. If it does not close on its high, a lot of traders will not buy it. Tough call, right? We're below the moving average, close below the moving average. I usually do not take
We
that buy.
apologize for the delay.
I usually do not take that buy unless the close is above the moving average, even though we're still always in long. I'm on hold. I was speaking with one technician, and he doesn't know how to get rid of the numbers, so he's transferring me to another technician. So I'm on hold again. I'm still on hold with tech support. And 24 went above the 26 first high of the double top. That lowers the chances that the bears will be able to break below 18 and fall for a measured move down. However, the market's deciding whether this is a bull leg in a trading range or the start of a bull trend. I still think the odds are we're going to go higher, but right now it looks like a bull leg in a trading range, and we're testing down to support. We're testing the buy signal bar high. Some traders put the stops break even after a strong reversal up. They place their stops break even, and this is testing them. It just hit their stop. The correct stop is still below 18 if bulls are still long. You know, a lot of the bulls obviously exited at 2 points. And for the bears, you got a double top. You can call it a triangle. You know, we went down, we went down, we went down, and then there's a smaller triangle here. But the odds still favor the bulls, who are still always in long. The bears taking these sells are taking a low risk trade. You know, they sell below anything, a bear bar, 28, 29. They put a stop above, taking a chance that we have a huge bear trend day. They know the odds are against it, but if this is one of those rare days when they are right, the reward is huge. So it's worth it for them to take the risk. But when you're taking those low risk trades, even though you occasionally win huge, you lose most of the time. And I don't like to lose most of the time, so I usually do not take low probability trades. Now, I said bar 26, not enough bars for a major trend reversal. Now we probably have enough bars, but again, the bulls need a pretty good bull bar. For them, it's a high 2 buy, 2 legs down, 1 pullback 2, but they really want a pretty good bull bar. The bears want to break below 26. They see a small double top, 24, 27. They want a measured move down. And then they have a bigger double top here, and they want to break below here, measured move down.
We apologize for the delay.
Still on hold with TradeStation. The bulls need a good buy signal bar. You know, they want a failed breakout below 26, and then they want the higher low major trend reversal, and a leg 1, leg 2 measured move up. Leg 1, leg 2 takes us to the top of the sell climax, and that's their target. Suppose it's a perfect doji like this. Can you still buy it? It becomes, I think, a lower probability buy. I still think the market's always in long. And because it's a lower probability buy, we may go sideways more. We may go down a little bit more. So if you're buying above 32 and it's a bad looking bar, you probably still need to stop below 18. Bulls need a pretty good bull bar here. Without it, a lot of bulls will wait to see if we start to break strongly to the upside and then buy. I still think we're always in long, and if the bulls get a close on the high here, I think it's a reasonable buy for a swing up. So it's okay, not great. 1 tick tail and still close below the moving average. And now about a 10 bar tight range. You know, so that's trading range behavior that the market does something and it's not quite as good as you want it to be. So higher probability, wait to see the breakout, but it is a higher low major trend reversal. The problem is that tight channel and the close below the moving average and that little tail. Right now, I do not have a buy order above 32 for two reasons. One is I'm on hold for tech support, and I will not be able to think clearly about my trade if I'm talking with tech support. And two, I don't like buying high up in a tight trading range right below the moving average. I'm going to turn the screen off as I talk to them.
Thank you for calling Trade Station. This is Michael Head. Can I start with your brokerage account number or customer ID, please?
37. I'm still on hold. They put me to a second higher level tech person, and that person also cannot figure out how to get rid of the -1 and the 0. So I'm on hold again. But anyway, you can see my problem with buying right below the moving average in a tight range, even with a good bull bar and the market being always in long. Still on hold. Bulls trying to get a micro double bottom. Theoretically, some bulls would have stops below 32, below the high 2 buy. This is another buy, but again, something wrong with it. Buying above a doji, not right. Buying above a bear bar, not good. Did not trigger the buy here. Triggered the buy here, but right.
Thank you for holding. I'm very sorry about that.
All right. Well, their advanced technician can't figure it out, and he's on hold, and he's going to talk to an advanced technician. For the bulls, it's still a high 2 buy. It's still always in long, but why are they not getting better buy setups? This is an endless pullback, and that's a low probability buy. Bulls, a lot of bulls will wait to see if we start to break strongly to the upside and then buy. If we suddenly get a bear breakout and a follow-through bar, then we're probably going to get another leg down. Like this, right? Trying to get a bull flag, and then we get a bear breakout and a follow-through bar, and we got more down. Here, bear breakout follow-through ultimately led to a measure move down, so a double top. This high is below that top, right? Higher probability that the bears will get the measure move down. This top is above that top, lower probability that we'll get the measure move down. Example of an endless pullback. It just keeps pulling back, constantly looking like it's going to reverse up. Lots of bull reversal bars, and it just pulls back forever. Endless pullback, bull flag, and then becomes neutral. Here we got a bear breakout and follow through and the start of a swing down. Strong bull trend, bull flag, at some point it's neutral, and then here the bear's going to break out and follow through. This is similar to today, endless pullback. And if you get the bear breakout and follow through the consecutive good-sized bear bars, you're probably going to get a couple legs down. Endless pullback, strong reversal up. Looks like it's going to form a higher low. Bulls trying to get a micro double bottom in addition to the high 2 major trend reversal. Still always in long, but why are the bulls unable to get better looking buy setups, right? And the reason they're unable to do it is they're not strong enough. It makes a lot of bulls hesitant to buy. It's all okay for the bulls, but not great.
Thank you once again, Mr.
TradeStation says this is a bug. All right. It says that it says -1 with this arrow. It says I went short here, and then I bought back my short here 15 minutes earlier. Obviously, that's impossible. So they have a bug. It should have had a +1 here where I went long, and then a 0 here where I went short. And they still have me on hold. I've been talking to a whole bunch of people about this. They're trying to insist that there must be some way I can fix it. But to me, it's clearly a bug because I did not go short here, and then I did not buy back my short with a 2-point profit here. You don't go short and then buy back 15 minutes earlier. You buy here. This should be a +1, and this should be a 0. So they're working on it. Still always in long, not strongly bullish. Bulls, higher low, major trend reversal. Is it a strong enough breakout for buyers below 39.40? Probably. Target is the top of the sell climax up here. Obviously, they got to break above here, but right now it looks more likely than not that we're going to go up. I got to turn my screen off and microphone off again because he's trying to figure out some way to fix this bug. I checked on my other computer and it's the same way. So it's not my computer's, it's a bug in TradeStation, and he's trying to deny that it's a bug, but I don't know how it's not a bug. You cannot go short and then buy back your short 15 minutes later. That cannot happen. The profit and loss on this is correct, right? They are showing, and the time is correct as well. I looked at the order, and it shows that I did buy here, and it shows that I did sell here to exit my long. What's wrong is the -1 and this arrow and the 0. There should be a 1 here with a green arrow, and then a 0 here with no arrow. Bulls trying to break above the lower high. Right now, it's more likely than not that we'll get up here at some point. I don't know if we go straight up, but more likely than not that we'll get there. The bears now want a double top here. They failed with their double top here. They're trying to get a double top here. Strong enough breakout, probably going higher. An attempt at a double top. And if it breaks above the double top, you got to be thinking about a measured move up, which would be around the top of that sell climax high. Probably buyers below 40. Let's say it's a bear bar closing on its low. Well, the bears are double top, but strong enough 38, 39. Probably buyers below. When he gets back on the line, I'll have to turn the screen off again. Sorry about that. TradeStation cannot figure out, why the numbers are backwards. This should be a 1 and this should be a 0. Instead, it has me going short here and buying back my short for a profit 15 minutes before I put the trade on. And I've talked with several TradeStation people, and they're going to call me back. They swear that it's not a bug. All right, so strong enough breakout, probably at least a small second leg up, and target the top of the sell climax, which is also back at yesterday's high. Again, we've had a lot of reversal days. Yesterday we sold off and rallied to a lower high. Today we sold off even more strongly. We're reversing up more strongly, but still unlikely to get back up to the high of the day. Stop for the bulls now. We have a strong enough breakout so that the swing bulls will raise their stop from the low of the day to the bottom of the most recent major higher low, which is here. By the close, no sign of a top. The bears want two legs up, one pullback two, a second leg trap, and what they hope is a trading range. We're getting a failed breakout above the top of yesterday's range. But even if the bears get a reversal, it probably will be a bear leg in a trading range. Right now, more likely buyers below 43, 42, and probably get up a little closer to the top of that sell climax. Less likely, it's just a trading range day with two legs up and down. This is kind of a consecutive bottom type deal. The bulls tried to get a wedge bottom here and then broke out, and consecutive complex bottoms mean that each bottom has two or three legs. They tried to get a wedge bull flag here and then another couple legs down, so kind of a double bottom. So I think of this as consecutive bottoms. We tried to bottom, failed. We got a breakout with the second leg down and then bottomed again. Can the bears start to sell above bars, arguing that there's so much trading range price action on the screen that we'll probably pull back soon? I think the bears who sell will make money, right? Just like, it looks like the bulls who bought the 11 low probably will make money. We're testing this breakout point, but probably buyers below. You have limit order bears who sold the 24 high and they're trying to sell 1 point higher. They probably will make money. Will probably come back below the 24 high at some point today. The rally is good for the bulls. We have 5 consecutive bull bars, but the bars are not particularly big, and we've also had a really big sell-off here. So this is probably a bull leg in a trading range day, just like this ended up as a bear leg in a trading range day. So would I buy up here? No, but I do think it's okay to buy below bars and scale in lower, stop down here. Bears, even though we have 5 consecutive, or now 6 consecutive bull bars, probably bears will start selling above and scaling in higher, betting that we'll have a hard time getting above the top of the sell climax. So I think we'll get there, but we'll probably fail around there. Can we get back up to the high of the day? Usually not. When a sell-off is this big and you get a reversal day, the market has a hard time getting above the original high. And if it does, it usually only gets a little bit above. So I do not have a lot of conviction. We're around the midpoint of the day's range. We're at the 9 low. I think we'll go a little bit higher, but not much higher. And if we get a reversal here, I think it probably will be minor, and we'll probably have to get up a little bit higher into this area between these two red lines. I think that's the sell zone. With the TradeStation thing, I really want them to fix it, because my goal at some point is to start, posting all these charts at the end of the day of live trades in the room. But I don't want them posted with stupid things like this, where traders look at it and say, wait a minute, it looks like he bought here, but it says -1. Did he go short here? Obviously I did not, but, TradeStation has to fix it, because I can't post things that when people look at them, they're confused, because it does not make sense. small pullback bull trend, but up to a likely resistance zone. Still easier to make money buying, but a lot of bulls will be hesitant to buy after this many bars up and up to a logical resistance zone. The 9 low, the 11 low, in the top of the sell climax high and yesterday's high. So bulls would rather buy a pullback. Bears, I think it's probably okay to sell here, but when the market is having very small pullbacks, even if it's a bull leg in a trading range, it makes it hard to make money selling. You know, when's the last time we had a bear bar? Right here. So it's still better to be long or flat. And buying up here, well, you know, it's likely that if whatever pullback we get, a bull who buys up here can scale in and avoid a loss and probably make money. But since the pullback is fairly likely soon, or at least the market going sideways soon, it's probably better not to buy at the high and wait to see what the pullback looks like. Probably will go sideways here. As I said, just like the limit order bulls who bought the 9 low were able to avoid a loss, the bulls who bought the 11 low were not able to avoid a loss, but a lot of them are so happy that it's in the sell zone that they're just getting out here with a small loss here and then with a profit either here or here. And the limit order bears who sold the 24 high probably will make money. So we'll probably pull back below the 24 high at some point over the next few bars, but we're still always in long. Probably will remain always in long for the rest of the day. Eight bars up, 7 bull bars, minor reversal. Might get down to the 42 low, the moving average, and the 24 high. So that is the buy zone. Somewhere down around there. The limit order bears are sold here and or 1 point higher. We'll probably buy back their shorts around there. And the moving average will get there within a couple of bars. So we'll probably start to do this again. What about stop order bears looking for a second leg trap? I would not sell with the stop. The pullbacks are too small. And second leg traps are usually climactic, and this is not particularly climactic. So more likely a minor reversal down to support. Bulls probably need more bars sideways to down, closer to the moving average. Limit order bears not making money. Limit order bulls not making money. The pullback probably needs more bars. The limit order bears 24 high, I think will make money, so I think we'll drop below the 24 high. Two legs down, you can call it a triangle. 1 pullback, 2 pullback, 3. Always in long, but probably sellers above. We're in the sell zone here. The bulls might be able to get a wedge rally. And for the bears so far, limit order bears have not made money, so they'll buy back their shorts above a bull bar like 48. I would not go short yet because the pullbacks are all too small. The issue is whether or not to stay long. I think it's okay to be long, stop down here, or buy above 48 or 50, but not ideal. It's similar to selling below 16. Probably going to fall a bar or two and then reverse. Probably will go up a little bit and then reverse. So you're only buying here if you can manage the trade, which means you're probably going to scalp. And if it goes above and then down, what do you do? Do you get out below 48? If I buy above 47, even though the risk is small, I probably would get out below, so if I buy above 50, I'd probably get out below 50. And then if it reversed up down here, I'd buy again. I think this is really not a good buy. I think most bulls want to buy lower. This rally is not all that strong, certainly compared to that. This, if we go up, it's potentially 3 legs, so not good. And tight trading range, not good. So most bulls would rather buy a deeper pullback. And bears probably will be selling not far above. The odds are we're not going to get all the way up to yesterday's high. The odds are we'll form some kind of a lower high, and I think this is the sell zone, and this is the buy zone. I talked about leg 1, leg 2 earlier. That's also right around yesterday's high and the top of the sell climax. We have some targets here. Yesterday's high, leg 1, pullback, leg 2. The sell climax high, the 10 high for the parabolic wedge bulls. Probably sellers in this zone. It's possible we can get all the way back to the open of the day or even the high of the day, but I think it's not likely we'll get to the high, and I think we probably will not get to the open, or if we get to the open, I don't think we'll close above it. Three pushes up, but most stop order bears do not want to sell until they first see limit order bears making money, and the limit order bears who sold the 24 high did not make money. Limit order bears who sold the 43 high did not make money. Limit order bears selling the 46 high probably will make money, but we have a couple magnets above. 2500, we're at key resistance. But yesterday's high, the 10 high, leg 1, leg 2, a little bit higher. Probably not going much higher. Probably we'll get a pullback soon because of resistance. Top of a channel, leg 1, leg 2, and then those other resistance levels. I just got a call from a TradeStation engineer saying that this is a bug and there's nothing I can do to fix it. Again, it shows -1, which means I've sold, and then it shows 0, which means I went flat. However, it says I sold and I went flat 15 minutes before I sold. And this should be a +1 here because I went long, and it should be a 0 here because I went flat. And they said that they have to fix the bug, and they'll do it on some later edition. Bulls trying to accelerate upward, but it could be a buy vacuum test of resistance. Next resistance is the open of the day, once if the bulls get above where they are. Because reversal days rarely ever become, they rarely ever go far above the high of the day. The odds are we're probably not going to go up much higher, but it's clearly a reversal day. Here, the market rallied 75 bars, could not get to a new high. Here, we rallied strongly, could not get to a new high. Let me just put that over there. Same thing, strong rally, could not get to a new high. Here we barely got to a new high, and then reversed down. However, the bears, it's a small pullback bull trend. That makes it very difficult to make money selling, and therefore a lot of the bears will not sell until we go sideways a little bit up here. It does not matter if we're at resistance and the market's going up strongly. Most bears will not sell until we go sideways at least a little bit. What's really interesting, theoretically, they were buy the low bulls at the 2 low and the 1 low. So theoretically, some of those bulls might wait for another strong buy, like above 18, and they just hold for the market to get there. So the next magnets are the 1 low and the 2 low, and obviously the open of the day. Strong enough up, so it looks like we'll probably go higher, whether or not we pause first. By the close, but I think really hard to manage at this point. We get 5 bars up, and we're running out of resistance levels. So probably too early to sell, too late to buy. Another possible leg 1, pullback leg 2. First reversal down, probably minor. Probably have to go sideways several bars first. I'm trapped out. I can't sell because it's too strongly up, but I can't buy because it's climactic and we're at a logical profit-taking area. Open of the day. Daily chart, another reversal day. We've had many bars closing around their open. Pretty dramatic ones here, and then again today. Very impressive rally, but I can't buy because I tend to trade a lot based on statistics. And we've had many reversal days over the past few months. Very few have gone much above the high of the day. All of these bars with big tails below are reversal days. And, if you look around, how many bars have big bull bodies after big tails on the bottom? None. So in the past, 50, 60, 70 bars, lots of bars with big tails, but then they do not have big bull bodies above. So here, you got back to the open, not much above. Did not get back to the open. So as strong as this is, I can't buy up here because the market has not gotten much above the open on all of the other reversal days, so I'm trapped out.
Avoid the nightmare of replacing your old cabinet.
As climactic as it is, and even though we're at resistance, I think it's pretty difficult to manage the short. Most bears will wait for a second entry short. And for the bulls, it's a buy climax. At resistance, open of the day, measured move, And over the past, I don't know, 100 days or so, no day has reversed up to far above the open. We don't have any days with a big tail below and a big bull body. We have lots of bars with big tails. We have lots of bars with big bull bodies. We do not have any bars in the past 100 days with both. So is today going to be the first one? Probably not. Just because there's probably not much more to the upside does not mean we have to go down. We could stay right around here for the rest of the day, which I think is probably likely. I just noticed that the Republicans unveiled their tax plan, and that's probably the cause of this reversal. I missed all of this, and sometimes that happens. Whenever a low probability event happens, a lot of times I'll miss it completely. What about considering the tax plan? Will that make me more bullish? No, I can't trade the news profitably, so I ignore that. I just look at the charts. We have a pause on 56, but no sign of a top, so I cannot short. And I'm not long, so I cannot take profits on longs. And I'm not buying in a buy climax, especially after a pause bar. So right now I'm trapped out. The market is ignoring that measured move, so I will as well. Open of the day still might be a magnet at the end of the day. Close enough to the all-time high, so we might get there. I've been saying that we might get one more new high on the daily chart, but because of the monthly chart having 11 bars in a bull microchannel, probably not going much higher. I know you look at this and say, well, why don't you just buy at the market? Because it's too climactic. And when you have climaxes, sometimes you get pretty abrupt reversals. And in a bear climax, a lot of times you'll sell the low and end up with a loss. And in a buy climax, a lot of times you'll end up buying the high and it reverses down and never comes back up there again. So I'd rather buy pullbacks. After a climax, I usually do not buy the first reversal down. I usually wait 5 or 10 bars, like this or this. And what happens if I end up, if we go up 20 points from here? Well, I'll probably miss it. Sometimes I miss the biggest trends because the biggest trends are usually low probability events. They happen rarely, so the odds are against them happening. And I don't like to trade low probability events. If I were still long, I would be holding long, probably at least a small part, but I'm not. I'm back to flat. I've been scalping the longs. New all-time high, biggest bull bar, more than 20 bars, probably an exhaustive end of the trend rather than the start of an even stronger leg up, but strong enough up so that we may have one more leg up after this bull bar. So still too early to sell. Extreme buy climax, new all-time high. It's interesting. We went below last week's low. Last week's high was the all-time high. So in the past 3 hours, we went below last week's low and above last week's high. Do you remember how small the bars were last week? Well, in 3 or 4 hours, we totally reversed all of the 5 days of last week. So now the weekly chart is outside up. Here's the weekly chart outside up. I still think we're going to have a hard time going much higher because the monthly chart is in an 11-bar bull microchannel, and that is so unusual. It's unlikely to become a 12, 13, 14, 15-bar bull microchannel, which means we'll probably get a pullback in the next month or two. You can see the profit taking at the all-time high. It's a parabolic wedge, different ways to look at it. 1 pullback, 2 pullback, 3, 1 pullback, 2 pullback, 3. I would get out of longs either at the market or below 58. We might get one more small push up, but probably not a big push up. And we still might close around the open of the day. The reversal up is so strong. If we do close near the open of the day, we'll probably close above the open of the day and have a bull body. It's reasonable to short below 59, but only if you can use a wide stop and scale in higher. Minimum stop would be some kind of a measured move up, maybe based upon the height of the most recent sell climax, so the stop would have to be up here. And for the bulls, even though it's a first reversal down, it's a parabolic buy climax, I would get out here. It's the opposite of this parabolic sell climax. The second leg is a big bear bar without much of with no pullback, just a pause bar, but it's still a second leg. So 1 pullback, 2 pullback, 3 pullback, and today's rally is the opposite of that. Here the bears get out above the bull bar. First reversal up minor, the bulls needed a double bottom. Opposite is true here. First reversal down minor, the bears will probably need a micro double top, but it's still a parabolic wedge buy climax and unlikely to go much higher, so we'll probably get some profit taking here. You can see how it's hesitating at the 59 low. The bulls know that a lot of bulls will exit below the bear bar, and they don't want it to trigger. It just did. So a lot of bulls will wait for a couple legs to buy. They will not buy above 60, even if it's a bull bar. And if it is a bull bar, then it's the opposite of 16. We might get 1 or 2 more bars and then a reversal. Theoretically, the always in bulls have to buy again above a bull bar. So if 60 is a bull bar, theoretically they buy again. But it would be comparable to the always in bears selling below 16. It's just so climactic that if it goes here, if it goes down, it'll probably just go down a couple bars and reverse. Here, the opposite is true. If it goes up, it'll probably just go up a couple bars and then try to reverse a second time. So I would be out of longs and not buy again for at least 5 bars or so. And aggressive bears will sell here and then either get out on a reversal up or hold with a wide stop and sell more on a second reversal down. Bottom of the buy climax is the most is a reasonable target for the bears, but we may get one more push up. But right now, this is the target for the bears. It also is the open of the day. And remember, all of the bear bars on the daily chart, that all of the sell-offs on the daily chart that became reversal days, all of them failed to get a big bull body. So today we'll probably fail to get a big bull body. You know, it has a big tail on the bottom, just like so many other bars over the past 100 bars. But none of the bars with big tails below also have big bull bodies. And therefore, the odds are against this day being different from all of those other days. I would not take that buy. I think probably sellers above. We have a big buy climax here and an even stronger buy climax here. Probably not much more up. Sometimes you get one more, even bigger buy climax, but most of the time, after you've had a pair of decent buy climaxes, you're going to go sideways or down. A lot of the bulls will wait 5 to 10 bars before buying again. They want to give the bears a chance to get a reversal. And if the bears fail to get a significant reversal in 5 or 10 bars, the bears will give up, the bulls will buy again, and maybe we'll get one more minor new high. It's still possible that the daily chart can do something it has not done in 100 bars and get a big bull body after getting a big tail below, but that's not likely. How far down will the bears expect the market to go? Well, they have two targets, the open of the day and the bottom of the most recent buy climax, which turns out to be at the open of the day. Unlikely to get a major reversal. Any reversal down will probably be minor. Three consecutive bear bars, but as bullish as this is, I think a lot of bulls will wait for more bars. Let's say 62 is a bull IOI. As I said, it'll be comparable to 16. You may get one or two more bars, but probably not a lot more bars. So in this case, this is the bears, and this would be the bulls. So if they get a bull IOI, we might get one more small push up. I would not take it. High 2 buy, always in long, but extreme buy climax and consecutive buy climax. While theoretically the always in bulls have to buy again, I would not. I would wait for more bars sideways to down. Do the bears who sold below 59 get out? It's reasonable, but some of them will hold, thinking that maybe we'll go up one or two more bars and then reverse. Since it's confusing, it looks like we'll probably go sideways here, more bars. Not a great buy, not a great sell. And the downside probably is limited to around the open of the day and the final buy climax low. So the best the bears probably get is a close down around the open. The reversal up is so strong, today will probably close somewhere above the open, but probably not far above the open, and therefore if you buy above 62, you've got to make really quick decisions because the odds are against it going up much higher. So what's more likely, the high 2 results in another leg up, or the consecutive buy climaxes result in a pullback to the 57 low in the open of the day? I think it's probably more likely that we go down. If we do go up, we probably will not go very far up before we try to get back down to obvious support. Bulls trying hard to prevent the reversal. They're trying to get one more push up from their high 2. Can we continue up like this for the rest of the day? This is exceptional, right? So whenever something very unusual happens, you can get very unusual trading for the rest of the day. So, it's possible that we could continue up strongly for the rest of the day. I just think it's not likely. I think more likely the strongest buy climax late in the trend will reverse down to the bottom of the buy climax. And then also so many days that have had strong bull reversals have had a hard time going much above the open of the day. Bulls might give up below 62 and then look to buy again around the open of the day and the moving average. If the bears get their breakout, measured move down, takes us to around the support, the bottom of the buy climax, open of the day, measured move, and moving average. Bulls are trying to keep it just sideways here. They hope that it goes sideways like this, maybe 5 or 10 bars, until the moving average gets up there. The bears will probably give up, and the bulls will try to get one more leg up. It's still slightly more likely that we're going to get down here. The bulls probably need 2 ticks below 62. 1 tick below 62, it can become a complex high 2 buy, 2 legs down, 1 pullback 2. But if you start getting 2 or 3 ticks below, then you might have enough momentum to get down to the targets. I think not a great buy. Hard for the bears to be short. A lot of the bears get out above 62, but I still think it's likely that we're going to get down to the 57 low and the open of the day before the end of the day. So not a strong buy up here. Bulls trying to get one more push up. Still always in long, but I think a lot of the bulls will scalp. And we're already at 6 ticks up from 62. Twice trying to get above the all-time high. The bears want a reversal and the bulls want a breakout and some kind of a measured move up. Maybe from here. The bears need this. They need a strong bear bar. 3 decent bull bars. So probably first reversal down will fail. So probably going up at least for a couple small legs. The bears would need a pretty dramatic bear bar here to attract sellers. By the way, with that TradeStation bug that I talked about, over the years, I've reported lots of bugs, and every time I do, it's the same thing. They tell me how wrong I am, and then I insist, and they send me to another person, and that person explains how I'm wrong, and then a third or fourth person, and then eventually they say I'm right. And that's the same with right here. You know, that this should be a 0, and this should be a +1. And several of the guys were insisting. I spoke with 4 different guys, and they were all insisting that I was wrong and that I had the settings wrong. But even with the wrong settings, it's impossible to get that. It's impossible to get a sell after you exit. You know, you exit after you enter, not before you enter. All right, so bears trying to get a final flag, but the 3 bull bars are enough, I think, to make a lot of bears not willing to sell. And the bulls, I think if you're a machine, you can buy up here. I think most of the bulls who bought here are looking to scalp out 1 or 2 points. Something funny about the proposed tax plan. The Republicans want to get rid of the state income tax. And in other words, you cannot deduct your state income tax from your federal. And, you know, what states have the biggest state income tax? You know, states like California and New York, which are heavily Democratic states. So what are the chances that the Republicans will succeed? I don't think the chances are very good. You know, between those 2 states, that's 20% of the country. So I think it's unlikely that they'll be able to get rid of that deduction. Probably buyers below the low of the prior bar. Now, one thing about this, you know, it's a buy the close rally, but it's starting around noon. And that's, I think, too early to make it to the end of the day. And if you get a buy the close rally that starts too early, you often get a pretty big reversal at the end of the day. Buy the close rally starting around noon. Buy the close rally starting around noon. Pulled back. We got resumption up later in the day, but a buy the close rally too early, starting too early, usually does not make it to the end of the day. This is comparable to today. A buy the close rally and a very strong bull trend. And as strong as it was, it still ended up reversing, because if it starts too early, it usually will not make it to the end of the day. It'll start to attract profit takers who look at it and say, wow, you know, I can go flat here and end up with a pretty good profit at the end of the day. And I'd rather do that than take a chance that we're going to continue up for the remainder of the day. In general, buy the close rally, traders get out, or I get out, 1 tick below a bear bar, or about 4 ticks below a bull bar, depending on how big the bars are. The target was the bottom of the buy climax, but now that we have a strong breakout to a new high, the target for the bears is the bottom of the most recent major high or low. So if the bears are able to get a reversal, this is the target, no longer that. I think the bulls get out 1 tick below a bear bar, so if it gets below 59, I think the bulls will get out. For the bears, it's an aggressive short. Maybe we'll get back down to the 64 low. And the bulls theoretically have to buy again above a bull bar. So if 70 is a bull bar, theoretically they buy again. I would not. I would wait for tomorrow. Do you buy outside up here? I would not. I would not take any more buys today. Limit order bears who sold the 58 high needed a 5-tick pullback to make money. They did not get it. Also, they were unable to scale in more, 1 point above 58. So a lot of this buying is the limit order bears buying back the shorts, trying to avoid a loss. Bulls trying to get a high one buy. I wouldn't take it. I would not take it. I'm not taking it. Suppose the bears get a bear bar here. That would be a second entry short for the failed breakout. It would also be a wedge. And if it closed on its low, I think that would be a reasonable stop entry sell to look to get back down here. But I think the bears need a pretty good looking bear bar. Otherwise, I would wait. Despite the wedge and the second entry failed breakout, it's a bull bar, so I would not short. I would be out of longs below 69, and I would not buy above 70. I would get out. I would get out of longs. As far as shorting goes, it's really, the math is hard. Clearly always in long. You're betting on a pullback down to the moving average or the bottom of the buy climax, the triangle, and the math is hard. I would get out of longs for sure, and I'm not opposed to shorting, but I'm not sure if you take this trade 10 times, I'm not sure how much money you'd make. While not always not by the close anymore, it's still bullish and difficult to short, and 7 or 8 bar tight range, I think difficult to buy. I think most bulls at the end of the day would get out below a decent bear bar 69 and not buy again here. A lot of times when you have a climactic day, you get profit taking at the end of the day. Sometimes the profit taking is early, sometimes it's right at the end of the day, and it looks like we're getting it at the end of the day. Bulls trying to get a close at an all-time high, not simply a breakout to an all-time high, and the bears trying to get down to the buy climax low. As I said, I think most bulls will stop buying, and they probably get out below 68 or 72, 69 or 72. That means there's a relative lack of buyers, and that can result in a quick move down to this area. $20 gap bar bulls. You got some bulls buying at the moving average, probably more bears buying back shorts at the moving average. A lot of times when you get a climax like that, the market goes sideways about halfway down. I think very few bulls. Maybe if you're an institutional computer, you'll buy. But if you're a discretionary trader, I do not think you'll buy any more today. And again, that absence of buying could lead the market to come all the way back down to the bottom of the final leg up. Stop order bears who sold below 59. Some of them sold more below a bear bar, either 69 or 72, and they needed to get one tick below 69 to get out break even. Can it go all the way back down to the open? I talked about that earlier in the day, that over the past, on the daily chart, over the past 100 days or so on the screen, there are a lot of reversal days where the market sold off and then rallied, but very few of them have big bull bodies. Most of them ended up closing around the open. And it looks like today we'll do the same. I thought after this, I thought we'd close around the open, but I thought we would have a bull body on the daily chart. In other words, I thought we'd close above the open. After this last leg up, I was less certain that we would close near the open, but once we got the 4 bull bars, 68, by the close rally starting too early, I started thinking maybe we'll get down a little bit, maybe to the 65 low. Pretty interesting day. Fairly easy to trade. 2 days ago, we had a buy signal bar pull back to the moving average, a test below the breakout point here in August. We did not pull very far below it, and it makes me think this test is not enough, that we'll have to fall below it. And in any case, I think we're going to fall below it more simply because all of the pullbacks have been fairly deep, and this is only 4 bars. And therefore, I think the best the bulls get is a little bit higher, not much higher, and then we'll get a pullback. This pullback retraced almost completely that rally. The pullback that we get here, I think, will retrace just about all of this rally, which means it'll be at least 100 points. It may surprise everyone and get all the way down to the March low, which would be a couple 100 points. Weekly chart. Last week was a sell signal. We went below its low, triggering the sell. And today we went above its high, and therefore it's an outside up week. I don't think that is a sign of particular strength. I still think we're trying to top out here, and therefore, we could still get back below last week's low tomorrow or Friday. The monthly chart right now, I think, is the biggest problem for the bulls. 11 months without a pullback is so unusual that it's very unlikely that it'll continue more than a month or two beyond where we are. Daily chart, another doji day. It's really interesting how much it sold off. I sold and I took 2 points, and I thought about holding for a test of the open, and I did not. I was happy to get the 2 points. Coming into today, we gapped far above yesterday's close and a little bit above yesterday's high. And first 2 bars, bull bar, bull follow through, always in long. However, the bars are not all that big, and we're at resistance, the all-time high, and we're at the top of a 2-week trading range, so not a great location for the bulls. Bar 3, a bear reversal bar, probably buyers below 2, buyers below 1, unless we start to get a series of bear bars, which we did. Bar 3, 4, 5, all bear bars. It makes it likely that there are sellers above 6. I thought we'd still try to bounce around the moving average. 10, we had a wedge. We went up above 1, up above 6, and now up above 10. I think it makes sense for the always in bears to get out above 10, but they have to be selling again below a bear bar, 12. We're probably not going a lot lower, And then we got the big surprise 13, and that meant that we probably were going to get a second leg down, which we did on 16. We traded above yesterday's high, tried to get below yesterday's low, but it was just too far to go. And we found support again at last week's low and got a good reversal on 18. I thought of it as consecutive complex bottoms. We tried to get a wedge bottom here, it failed, and then we got two more legs down, strong enough for a second leg down, and we had a good looking bull bar. Channel tight, usually a minor reversal, and the bulls usually need a higher low major trend reversal, which they got over here. Buying above 32, tight channel. Second entry buy above 36, better. And by 40, 41, looks like we were going at least a little bit higher. And then 53, 54, it looks like we're going a lot higher. I don't know how much higher, but a lot higher. And then 57, 58, extremely big bull bars late in a bull trend. We have a parabolic wedge with 46 or 52 for the first push, and then this buy climax 55, and then this other buy climax 58. We're probably either at the high of the day or we'll get one more new high and then reverse down. And we had a high 2 at 62, but only 4 bars down, and the bulls got a micro double bottom and they bought above 64 or 65. And then we got those 4 bull bars, 66, 67, 68, 65. I said that, yes, it's by the close, but it's too early. And when by the close starts too early, it usually does not make it to the end of the day and usually gets some kind of a reversal. This is a pretty big reversal. The bears tried to get down below 68, 69. I said, I think the bears get out below 69, and they do not. The bulls get out below 69, one tick below a bear bar, and they would not buy again above 70 because the buy the close rally is coming too early, and it probably will result in profit taking. And the bulls went up 3 more ticks. They got a second entry 72, third entry 74, and we sold off pretty close to the open of the day, and we ended up with a doji day on the daily chart. Stop entries, you could buy above 1, taking a chance it's the low of the day, but I would wait. We're at the top of a tight trading range, and you could sell below 3, but probably buyers below 2, buyers below 1. And then, but I would not buy yet either. Let's just talk about the stop entries. You could sell below 3, not great. Buy above 6, probably sellers above. Sell below 7, a bull bar, probably buyers not far below, maybe at the moving average. Buy above 10 for the parabolic wedge, maybe, but tail and 2 bear bars, 8, 9. I would rather wait for a second entry buy or for a strong reversal up. And then buy above 15. I think it's okay for the bears to get out, but I think we're probably going to get one more push down. Sell below 16, okay to sell, similar to yesterday, 23. However, I bet we probably will only fall a bar or 2 before we try to reverse. And 16, I thought a reasonable buy. And then these sells I would not take because I think the reversal up is big enough so that we have a reasonable chance at getting up to the sell climax high, the 12 high. We're already at the 16 sell climax high. We might get up there. Also, I think it was reasonable for the bulls to buy above 10 and below 11, and that's another reason to get there. I think it's less likely that we'll get all the way up to the 2 low, even though it was reasonable for the bulls to buy there. And however, we did get there. So stop entry above 32, I'd put a stop below 18, or stop entry above 36 or 38. And then here, low 2 short, 46, but 7 or 8 bull bars, I would not take the short. 50, we have a micro double bottom. I think we'll probably go a little bit up and create a wedge, 1, 2, 3 at this high. And I was surprised we got 53, 54 and became reasonably strong by the close. I'd get out below 59. The bears could short there, but they got to buy back the shorts above a high 2, 62, and the bulls will buy above either 62 or the second reversal up above 62, maybe above 64 or 65. And I would get out, as I said, below 69. I would not buy above 70. Aggressive bears would sell below 72 or 74, looking for profit taking on the part of the bulls. As it was going down, 75, 76, I said, there's going to be an absence of buyers, and therefore we could fall further than what appears likely. The bulls will give up, take their profits, and not look to buy again until tomorrow. So that absence of buyers can result in a relatively sharp sell-off despite the huge bull trend. Buy the close, sell the close. 2 is buy the close, but I would wait. And then 5 is sell the close, but the bars are not all that big, but it's still sell the close. 5, 6, 7, 8, 9. I'd get out above 10, and then 13, a surprise, so we're probably going lower. We're right at the 60-minute moving average, but the odds are we'll get one more push down. Disappointment for the bears on 15. A lot of the bears will get out above 15, but there's a slightly higher chance that we'll go a little bit lower. Is it sell the close again on 17? I would not. Chances are this is going to be a complex bottom. You can call it a double bottom 15, 18. You can call it a second entry reversal. You can go to a second leg down, a failed breakout below last week's low again. Buy the close 20. I thought we were always in long when we went above 18, but I thought the first reversal up would be minor and the bulls would need a major trend reversal, which they got over here. So buy the close 20, 21. We're right at the top of the sell climax. 16 high moving average. 40% chance we'll have a swing down. And the bears started it. They got an endless pullback for about 10 bars through here, but then the bulls got the breakout. Is it buy the close on 43 bull bars? Well, the bodies are shrinking. 42, 43, more likely buy the close. And then 54, 55, I think became clearly buy the close. 56, 57, 58, 57, 58, I would not, because it's an especially big bar, the biggest bull bar in the entire trend, so that will attract profit taking. So I would buy pullbacks, not that close. It's also testing the all-time high. And then 3 bear bars, 61, probably not sell the close. The bars are not all that big. Looks like sideways. And then theoretically it's buy the close again, 67. But like I said, when buy the close starts too early, there's a big risk of a significant reversal, and therefore I would not buy closes. I would either look to buy pullback or look to sell below bear bars. Limit orders, probably buyers below 1, buyers below 2, but after 3 bear bars, 5, I think the bears get out, the bulls get out, and the bears short. And limit orders, probably sellers above 6. 10 buyers or sellers, I'd get out of shorts, but difficult to sell again below 12. And probably sellers above 14, but then you get 15 closing on its high. Possible low of the day, but more likely we'll get one more leg sideways to down. So probably sellers above 14 and sellers above 15, but I would not. I would get out of shorts. And then 19, probably buyers below. Up here, the market's deciding whether this is going to be a trading range for a couple of hours or the start of a bull trend, and therefore you got to be careful about buying high, because if it's trading range, we can come all the way to the 18 low, maybe even below. And therefore, you buy up here only if you're swing trading. You're not buying up here for scalps, because too much risk it's going to trade down. Buyers below bear bars, below 25, and sellers above, there might be sellers above 23, 25, taking a chance that it's a trading range and it will fall deep enough for a scalp, but I thought we stayed always in long, and therefore I'm more interested in buying. Up here, 44, I said there might be sellers above, but I think it's not a great sell because of 5 consecutive or 6 consecutive bull bars. We're probably going up to the next resistance level here. Less likely all the way here, even less likely here, but we did go all the way up there. Buyers, would I buy the 46 low? No, it's a low too, and we're pretty close to the target, the top of the sell climax. And then here, buy the 59 low, no way. Sell the 60 high, maybe for a scalp. And then in here, I would not sell 62, I would not buy 63 low. And then up here, technically probably buyers below 68, but I think bears get out below 69, so I would not take that buy. If anything, I would be looking to sell, taking a chance that we would sell off to the 65 low, less likely the open of the day. really impressive that it sold off that much after this buying, but that's what often happens. And you can see, despite the attempt to get a big bull reversal bar closing on its high, we got a pretty big sell-off, and we'll probably close down around here. So what does this mean, big picture? It's just another brick in the wall, right? It's just another trading range day. It's a trading range day with big reversals, down and up and down, but it's still a big trading range day. A lot of times when the market goes to an all-time high, it does it in a very climactic way, and it looks like it's going a lot higher, but it reverses instead. New all-time high, this is what we got afterwards. New all-time high, this is what happened. New all-time high, new all-time high, new all-time high installed. So just because you see a really strong rally up to the all-time high does not mean it's the start of a new strong leg up and that we'll get a big breakout above the high. You know, here we have a new all-time high, and this is what happened. So even though this is extremely bullish, it does not mean that it's the start of a strong breakout above the prior high. To me, this is the sell zone. It's a good area to buy puts or put spreads, but I would get them several months out because it might take 2 or 3 months before the bears get their 50, 100, 200 point sell-off. But it's a really good location for the bears. And the buy climax on the monthly chart is also really good for the bears. This is the end of the month, and the bulls are trying to get the bar to be as bullish as possible. You know, Friday's the last day of the month, and so far it's a very good bull bar, but probably not much higher prices. 11 bar bull micro channel, really unusual. Okay, Al, in your opinion, what have your most successful students done to get where they are today? I think most of them have studied a whole bunch of charts. You know, at the end of the day, they're printing out charts, and they're constantly, just looking for patterns. They're looking at what they traded, what they missed, what they did wrong, and they're just, I think that's the single most important thing. If you're a discretionary trader trading price action, I think the single best thing you can do is just constantly look at charts. I say stuff all day long that I think is important, and it's really good to be able to recognize those things real time. And the faster you can recognize them, the more you're able to place trades or manage trades based upon that. Al, can you talk more about disappointment bars? Do you use the term on swings or just scalps? When I'm talking about disappointment bars, I'm usually talking about buy the close or sell the close markets. So, for example, here we have a sell the close markets market down here, and at some point the bears will be disappointed. The bulls will get a bull bar, and often a strong bull bar, enough so that the bears who sold that 14 close are disappointed. And then I pay a lot of attention to what happens next. Are the bears so disappointed that they stop selling? Do the bulls believe the bears are so disappointed that the bears will stop selling, and therefore the bulls will buy? And in general, when you have a reasonably strong buy or sell the close trend and you get a disappointment bar, the market will have one more push your way, and you can avoid a loss. So, for example, a bear selling the 14 close, certainly disappointed, but chances are the first reversal up will fail. So he sells that 14 close, and he says, darn, 15, that's not what I wanted, but it should come back to the 14 close, and therefore I'll try to sell more 1 or 2 points higher, and then maybe buy back my short when it gets down to the close. I'll end up break even on my first sell and with a profit on my second sell. We get disappointment bars all the time, every day, and some of them seem fairly meaningless, but they can lead to pretty dramatic moves. So for example, sell the close, sell the close, sell the close, and you sell that 19 close. I would never do it. It's at support, and it's a really big sell climax bar. But some bears will sell it, and they'll use an appropriate stop, maybe above the top of the most recent sell climax here, and they'll scale in higher. So they'll sell that close. They're not going to sell 1 point higher because the bars are so big, but they might sell more 2 points higher, 4 points higher, expecting the market to get back down to that close. Other bears will sell that close and they'll say, 20, that's pretty scary. And then they'll say we could go a lot higher. However, we should still test back down here. And therefore, I'll sell that close. I will not get out here. I'll wait until there's a bear bar closing on its low, and I'll sell more below that bear bar, expecting the market to come back down here so that I can get out break even on my first trade and with a pretty good profit on my second trade. And a lot of times the disappointment bars lead to pretty subtle reversals. We've had a couple recently. I'm trying to find one. Now, I know we had a pretty good one this week. At least I believe it was this week. Sometimes I just get confused. For the bulls who bought this, they were disappointed by that, and a lot got out on the third bear bar. Some bought more above here, and then looked to get out on their first entry back around that close. Here, bull bar, disappointment, and you can see the bulls who did not get out on the third or fourth bear close or above the bear bars got out on this little rally, and that's what caused that tail. The disappointed bulls who did not get out now are getting out at break even up there. Okay, question, do you consider today to be MDT on the daily chart, micro double top? If so, could the downside accelerate from here? When I use the term micro double top, micro double bottom, I'm usually referring to a pattern that is 2, 3, or 4 bars wide. And if it starts getting 5 or 6 or 7 bars, I stop using the term micro and I start saying small. And so on the daily chart, this is the micro double top, this high and that high. This I would call a small double top, but it doesn't really matter. Small double top, a micro double top is, and especially small double top. It doesn't matter. I think we're not going up very far, and I think we're going down much more than we're going up. And here we got a micro double top or a small double top, another double top, another double top. Most tops fail, and the result is usually sideways. Here, small double top, a bigger double top, another double top. And you can see most do not lead to big reversals. Most reversal patterns fail. Eventually one succeeds. I look at how strong the bear bars are, and the bear bars are not strong. I look at how strong the sell signal bars are. So if you're calling this daily chart a double top here, this is not a strong sell signal bar, and therefore there probably are buyers below. So I look at context, I look at the way the bars look, and the better the context, the better the bars look, the higher the probability that traders will get the reversal. And this does not look like a high probability reversal, even though I think we're going to sell off. Just looking at this chart, I'm thinking, that doesn't look like a top yet. It's stair stepping up, and the pullbacks are fairly deep, and therefore this is probably not the end of the pullback. We're probably going further below this high. But just looking at this, I'm not saying, wow, what a great sell signal bar for tomorrow. It's not. The bears probably need to get more bear bars. Just look over the past 10 days. We have 3 bear bars and they're all tiny, not much selling pressure. Here, the bears started to accumulate bear bars and they were able to get a reversal. So the bears still probably need more. All right, anyway, for the traders who were really upset by the quiet days that we've had over here and over here, I said the ranges would pick up, and they are. They're picking up. I don't know if we'll go back to tight trending ranges right away, but whenever you have a buy climax like this, you have a 50% chance of follow-through buying in the first 2 hours tomorrow. You have a 75% chance that the market is going to enter a trading range lasting at least 2 hours and beginning by the end of the second hour. it looks like the trading range began here. Big up, big down, probably the start of a trading range. So, tomorrow, probably going to do a lot of sideways trading early on. Can we resume up? As I said, I think the upside from here is probably not great. It's the end of the month, and on the monthly chart, we're near the high of the month, and that means next month probably will trade above this month's high. It's possible next month could be a bear inside bar or 2-bar reversal. Right now it's too early to tell, but whenever a month closes on its high in a bull trend, the odds are the next month is going to go at least a little higher. Just look at the past 18 months. Every bull bar that closed on or near its high, the next month went at least a little bit higher. But exciting times, right? We're getting big swings, which is good. It makes it easier to make money. Okay, hope everybody has a good night.